So how does the news affect the price fluctuation of a stock? Would you want to know? Well, it's basic economic supply and demand. Think of it this way. Basically, when the price goes up, that means that you have more buyers than sellers. What does that mean? That means you have more demand than the supply, which means also that you have a lot of investors who feel like the price is fair, it's cheap enough, so they buy, there is less sellers, thus they end up bringing the price up. Well, the opposite is when the price goes down, that means you have more sellers than buyers. This means that there is more supply than an actual demand. What does this mean? This means that investors feel like the price is a little too high, so they think that it's time to sell. So they start selling. There is more selling, less buying, thus the price goes down. It's pretty simple, right? So then now, I'd like to say this. If you like this video and you would like to see more, please hit the like button, subscribe, and turn on the notification bell so you can get more videos like this when we post them. And also, don't forget to get your free stocks with either Weibo or Robinhood when you sign up with our link down in the description below. So now, how does the news affect the stock prices? Well, I think that's a very broad and vague question to ask because I think that it has to be broken down in different aspects. So let's go. The first one is company news. So in company news, it includes things such as earnings report. The earnings report basically determines the intrinsic value of the stock. What is intrinsic value? Intrinsic value is basically a measure of what an asset is fundamentally worth. Well, in this case, the stock price. So then so then how does it work here? Basically, every publicly traded company are required to release an earnings report every 3 months, every quarter. So then every quarter, when these companies release these earnings report, investors go and look at these earnings report because what they do, these earnings report basically reflect the financial state of the company. Well, if they reflect the financial state of the company, this means that these investors will go in and look at numbers such as sales growth, revenue growth, and margin. And these are on an yearly basis, right? So then let's think of it this way. If the sales are increasing year over year, and then the revenue is also increasing year over year, well, if the sales are increasing, that means the company is selling more and is making more money. Well, if they're selling more, making more money, that means the revenue is increasing. Well, if the revenue is increasing, but also at the same time the company found a way to provide these services or these goods at a cheaper price, now that also means that the margin of the company increased. What is margin? Margin is the percentage of net profit that the company gets to keep after expenses and taxes, right? So then, if they're making more money, now that means that the company can take the money and reinvest it back into the company to try and develop new services or new products for higher revenue into the future. Or they can also take a portion of that money and redistribute it to stockholders or shareholders through what is called dividends. So then, how does all this news basically influence the stock price? So then here's the thing. We will take the example of Snapchat. Back in July of 2020, Snapchat released their earnings. Their earnings report weren't as great because the revenue of Snapchat had slipped and investors were not happy with what happened. So then the stock of Snapchat tanked. And then in October of 2020, Snapchat released another earnings report where they showed better numbers, actually really good numbers. And guess what happened? Snapchat literally doubled in 24 hours, right? So that's really crazy. The second one is industry news. This is a type of news that affects an entire industry. For example, if we look at what is happening right now in the electrical vehicle sector or EV and the renewable energy sector, basically because of the political news around the US presidency and the market anticipating a Biden win at this point in time. Guys, please don't kill the messenger. I'm not taking any sides here, just stating fact. Well then, concerning Biden, if Biden is going to be president, then investors are thinking, well, then that means Biden in the future will be favoring more electrical vehicle companies and renewable energy companies in order to fight climate change. Then, if Biden is going to do that, by the way, this is forward thinking, right? If he's going to do that, that means this company in the future will have the opportunity to make more money because they might receive some government funding. They may even receive certain incentives for doing what they are doing. This means that they will really be favored, that they will be making more money, and investors are like, well, that means they will be valued at higher prices in the future. So then investors pile up in the market and they are buying companies such as NIO, the Chinese automaker, or Tesla, the US automaker, or even companies such as Workhorse, right? And then when we look at the renewable energy sector, we're talking about companies such as First Solar, Canadian Solar, even Fuelcell Energy. Guys, Fuelcell Energy literally doubled, tripled, quadrupled in 1 week. By the way, guys, this is not a buying recommendation nor financial advice. For matter regarding that, please consult with your financial advisor. So the third one is government economic report. These include the employment report. The employment report is used as an indicator of the strength of the US economy and consumer. This means that if good numbers are reported, that the US economy is growing and consumers are willing to pay for goods and services, which will then in turn end up benefiting the companies that are providing these goods and services while the US economy is also growing. The fourth one is hype. This one is the most insane one because it can drag stock prices much higher in a very short amount of time. I like to refer to this one as insanity at its best. Now let's discuss what hype is exactly. It's basically pure speculation stirred by rumors, over expectation, and FOMO, or fear of missing out. Guys, this one doesn't have to make sense, okay? It's basically investors losing their minds and going all in on these stocks, and they are basically dramatically increasing the price, right? So let's take a look at Tesla. Tesla is, as of now, the most valuable car company in the world and has basically made Elon Musk the second world richest person, overtaking Bill Gates. So what's happening with Tesla? On November 16 of 2020, it was reported that Tesla was going to be included into the S&P 500 by December 21st of 2020. So then the logic behind this is, if Tesla is going to be included into the S&P 500, which is the index that tracks the 500 biggest company listed on the US stock exchange, then that means because out there are other companies that have index ETF funds and index mutual funds, and these funds buy into companies that are into the S&P 500 in order for them to try and mimic the performance of the S&P 500. Well then, if Tesla is included into the S&P 500, now that means these companies with those funds such as Fidelity or Vanguard will basically be putting more of their money into Tesla in the future. So then if more money is going into Tesla in the future, that means that it will end up eventually to increase the share price of Tesla. But then when we look at since November 16 when this news came out, we can tell that basically the market priced in this news into Tesla. But then ever since then, Tesla stock has just kept increasing, and that's where the hype comes in. Because after a certain price increase, it doesn't make sense anymore. Investors are just buying and buying and buying and just basically dragging the price higher and higher and higher. By the way, guys, by December 21st, I'm not going to be surprised if Tesla is trading at $700. That is not financial advice. Please don't quote me on that, but I'm just saying, I guess we will see. So then, with that being said, I'd like to say thank you for watching this video. If you like these videos, please hit the like button, subscribe, and turn on the notification bell so you can get notifications when videos like these are out. And I will see you in the next video on Sunday.